Hi traders and welcome to Pepperstone's technical analysis wrap on Friday the 20th of March. So we've seen another really big week of moves, especially on some of the majors. Now we're starting to see some real breakout moves, both short and long. So we'll jump straight into the charts and start checking out some of the best plays for the week coming up. So we'll start with the Aussie. We can see here on the monthly chart, that's how far we have to go out, the magnitude of this big move that we can see. It probably best illustrates what's actually happened here. This around this level here is the GFC lows. You can see that we've already surpassed that. We've had some, obviously interest rate drops. Yesterday, a surprise 0.25% drop to bring us down to only 0.25%. That was already factored into the price. The government's starting to put in some stimulus, which may or may not affect the Aussie dollar any further now, but it was already factored in before the drop anyway. So mid-50s is what we predicted in the webinar. Didn't expect it was going to happen so quickly, but there it is. It's rebounded now up to sort of that 58.5 area. You can see that it's trying to retrace, it's trying to battle on, but probably the fives are probably the new norm for the Aussie dollar now for a little while. It's probably going to hover and probably scalp in between the 55 cent and 60 cent range for a little while yet. I can't imagine that it's going to be pushing either boundary very far. We'll just move back to a daily chart now. You can see the magnitude. Every day is obviously a big one. Yesterday was a massive selling and buying and stayed very similar at the open and the close. So very big movement day. Consolidation happening today, but again probably looking for scalping opportunities on the smaller time frame inside that 55 cent and 60 cent range to probably get your pips out of that one. Okay, the US dollar CAD continued to just completely shoot the lights out. You can see the highs that it reached here, all the way up into very close to 147. It's had a bit of a pullback now. Like it obviously had that day yesterday where it consolidated a little bit, some shorting and some longing. Basically finished as an indecision candle, as we can see. We've had a little bit of a sell-off here, but again, you're going to have to go to very small time frames to try and look for scalping opportunities here. Wouldn't be trying to long it and jump on a moving train because we really don't know where it's going to end. Haven't got a lot of guidance as to where it could go. But we are probably looking for the pullback. So probably looking for weakness in this market on the smaller time frames, potentially trade it back to a 20 moving average. A lot of this is US dollar based strength, of course, so we don't really know where the US dollar, where that's going to end. The indices are still very volatile. The coronavirus is still playing havoc with the world markets at the moment. So, we can't say for certain when that volatility will end, and until it does, the US dollar pairs are going to be pretty rampant, a little bit like this one is here. So probably look for those pullbacks, like we said, and potentially go long on a decent pullback. But I can't see any of that happening just yet. So you have to go to the smaller time frames and probably try and scalp that for the smaller opportunities. All right, even the US dollar Swissy paints a pretty similar picture, although this one has come straight into roll reversal zone. So this gives us a little bit more clarity as to where it might end its run, and it also gives us a little bit of an indication of where it could potentially go with a little bit more weakness. So we'd be looking for selling opportunities on the smaller time frames here. We can see that this roll reversal zone, what was support there, is providing resistance now. The 200's also there, giving us a bit more resistance. It's pulled back underneath it now, so currently it's sitting just below the 200. Obviously a pretty easy target to go for would be this zone here, which is the previous support. It was trading inside that zone for a little while, potentially looking for maybe long opportunities. If it comes back down here and tests that level, probably looking for long opportunities from that point onwards to test these highs again and potentially break through. But again, while the US dollar strength is still there, you wouldn't be making big long-term moves on this one. You'd be looking for those scalping opportunities. This one does give us a little bit more clarity and gives us a bit more resistance to work with, which is pretty recent. Okay, we'll go on to the next US dollar based pair, which is the yen. This is a little bit the same in that it blasted through. We saw a hell of a lot of strength, pushing it all the way into the 111s again. It happened very quickly. That's a 10-cent move that has not taken very long at all, so it's been a very nice move. But starting to feel a little bit of pain at this level, so probably once again, you can see this point here is giving it a little bit of trouble. It's pulled back into it now, so I'd like to think that it might pull back around to this zone here, similar to the Swissy. a pullback to basically that 108.5 area would be a great place to be potentially longing this one again. It'll be coinciding with the touches of the moving averages and the cross if it gets there, so that would be a fantastic pullback zone. Look for those opportunities on the US dollar yen. Okay, the S&P 500, one we always check out. We can see here that we've got basically the volatility every day has been extreme, 5 to 10% moves basically on a daily basis. Running riot is this index here, along with the other world indices. The action has started to slow down a little bit now. We're starting to see a little bit more consolidation around this zone here. It's real fall level. Look, I'll have to go out to a weekly to find it. Probably a monthly actually would even be a better example. This zone here around the 2120, 2130 is the pre-Trump era, and more than likely the zone that it will come to if it starts to sell off. If it breaks to a new low here and gets into the 22s again and starts to free fall, this is the level that we would expect to catch at that 2120 to 2130 level. You can see this is a monthly chart, so you can see how many months this level was respected for, nearly coming on a year and a half there really. So it's a very obvious target for it to go to. If it doesn't stop there and the pandemic continues to increase, and the market sells off, all the way down to this level, but I wouldn't like to see what's happening to the world markets if that happens. I'd like to think that if it does fall, the 2120 will catch it, and that will be a fantastic reload zone for long opportunities on this index. You can see it's starting to pull back to around the level over here, which is that sort of 2400 level. You could see it pulling up here and potentially going long, but with so much uncertainty in the market, I'm not convinced that this is going to be its bottom. I think that look for the smaller term change of trends or continuation of trends to get to this level here. This is our optimal buying zone if it reaches this level. Okay, gold's another interesting area. It's come back all the way to that sort of the 1480, 1470 zone. You can see here it's been hovering here for a few days now. You can see this is a great role reversal area. It was support here, was resistance over here. Would not surprise me at all to see it retrace and go long. Very obvious target of this support zone and resistance zone here. That's where I'd like to see it pull back. We've got a moving average crossover about to happen here, so we've got to treat this one with a little bit more caution, but this is obviously a reload zone. You probably should already be long, but if not, look for a smaller change of trend, like a 1 hour or 4 hour. When you get that series of higher highs and higher lows, potentially look for a long around this level here, and be aiming for around that sort of 1560 area again. Could provide a good opportunity to go long and then potentially reverse that trade. So we'll jump straight into the euro now. We can see here this is a weekly chart. The 200 weekly moving average certainly pulled it up. You can see there that it reached pretty much 115. But the 200 certainly pulled it up. The last 2 weeks has just been absolute drastic selling. You can see it's dropped nearly 700 pips in the last basically 2 weekly candles. We'll go to a daily. We can see that effect now. The last 3 or 4 days have just been absolute belt fest on this one. We'll go out to a weekly again so we can actually look for some support. The first place that we're going to probably really find a good deal of support is the 107, which is basically where it is now. You can see here that we've got some previous resistance. We should find some support there. It wouldn't surprise me to see it pull back to around this morning star, which basically started the big procession up anyway. So it wouldn't surprise me to see it get back up to that mid to low 108s. Which is kind of where it's heading now, but probably another sell-off maybe from that zone. I'm not convinced it's actually going to be doing anything great on the longer term, but I think it can probably get back up there and maybe look for some shorting opportunities from that point onwards. With so much dollar strength, you could see that this one could have a little bit more to fall, but we need to see a bit of a retrace now. We don't want to be just jumping on the moving train. We want to see a good retrace to around this level here and maybe look for shorting opportunities. Failing that, if it gets up above there and breaks up higher, wait for a pullback from the upside to that level again from up, and look for a change of trend, and then maybe look at and taking it into these highs here, which is around that sort of 111 again. But again, it's still looking very, very short. When you see something drop like that, trying to long it, longer term is a bit of a falling knife strategy, which is not a good idea. So we want to be basically trying to look for a retrace and then continue on with the trend, trade what we see. The last one we will look at today is the oil. We can see oil's had a really big rebound. It pushed very, very low. Obviously, in the last, little bit here, we can see it's reached. We haven't even got information on the chart that actually shows this, but it got down to 20.50, I think was its low. It's had a pretty good rebound now. It's back up to around nearly $27. Look, it's one of those ones where, oil is probably not really a sustainable commodity at the price where it was, so it's no surprise to see it bounce. It is a trade war, so technicals don't mean as much as obviously a decision made from OPEC or governing countries that are producing this oil. We want to see what happens here, but potentially there could be some good opportunities if it does happen to pull back and make a lower high and a lower low, and then make a new high from here. We can start trading the technicals on it again, because it is generally a very good technical trade, but fundamentals are playing a little bit more of a part on this one, so certainly one to watch. But from a technical standpoint, if it pulls back to sort of that low 20s again, maybe a 22, it'll make a lower, then we'll have a sequence of a low and a higher low. If it makes a new high past this, we could be looking for some long opportunities to potentially fill that gap into the 35s, and then potentially move up and even get into the 40s again if the decisions start to go their way. All right, so hope everybody's had a great week's trading. We've had heaps of volatility. Hopefully you've been able to capture some of that. Again, while the markets are so volatile, stick to the scalping strategies. Don't look for too many long-term positions because it's still very, very uncertain times in all of the world markets. So plenty of scalping opportunities where you can get those good moves, but basically play within those bounds. And if you're uncertain about where a pair or an indice is moving, always stick to those key zones, because they're the ones that will gravitate to when it is uncertain. Have a great weekend, guys, and I'll see you all next week.